Okay, thank you. Welcome back. In this lecture, basically, we'll be continuing what we talked about in our previous lecture on audits. We ended with the duties of an auditor. The duties of an auditor. So in this lecture, we will be moving on to the rights of an auditor. What are the rights of an auditor? I'm sure you'd want to understand that. So basically, the rights of an external auditor are a lot, but we'll touch on a number of them, and then we'll try and understand them. So first of all, you need to understand that the auditor has the right of access to the books and accounts of the company. Obviously, if the auditor is going to do any meaningful work, the auditor needs the access to the books and accounts of the company, because that will be the evidence that would form their opinion on the financial statement. So this is very, very key. They need the right of access to the books and accounts of the company. Second thing is that they also have a right to all information and explanations necessary for the performance of their duties. So if the auditor doesn't understand something, the auditor doesn't get something, the auditor doesn't know something, he has a right for them to get an explanation on what they are seeking to achieve. So if they don't understand a particular transaction, they also have a right to walk to the client to say, hey, we don't understand this transaction. What exactly does this mean? Can you explain this to us? So they have a right to explanation. Another thing is that they also have a right to speak at any annual general meeting, on matters that affect the audit or the auditor, So they have a right to speak up at an annual general meeting or AGMs. This is especially important where auditors and directors agree on some matters concerning the audits, and there's no effective medium of communicating it aside the AGM. And so they can communicate during these meetings as well. So they have a right to speak on matters relating to the audit or the auditor. They also have a right to apply to the court for directions in relation to matters that arise in connection with the performance of their audit function. So they have a right to apply to the court for directions. It's all in their rights. So they have a right of access to the books. They have a right to information and explanation. They have a right to speak at the annual general meeting, and also have a right to apply to the court as well. So these are some of the rights of the external auditor that you need to understand. Very, very important. Very, very important. Please keep this at the back of your mind. Then you must also know that management has a responsibility. Management and those charged with governance have a responsibility when it comes to the audit work. So one of the responsibilities of management is prevention and detection of fraud. We've already talked about the fact that management is supposed to prepare the financial statements. Management has to prepare the financial statements if any audit is going to take place, because it's the financial statements that are audited, right? So management has to prepare these financial statements. That's the second thing that you need to know. Management is also responsible for the design and implementation of effective internal controls. So that's also the responsibility of management. Internal controls, very, very key. They have a responsibility to prepare financial statements, but they also have a responsibility to, design and implement effective internal controls. They also have a responsibility to provide the auditor with access to information. They need to give the auditor information so that they can do their audit work. That is the responsibility of management. And also in situations where the auditor might need an explanation from a particular person or group of people, the management must give unrestricted access to persons whom the auditor needs access to complete the audit. Unrestricted access, that's a key word here. Unrestricted access. So the auditor must give this unrestricted access to the client must give this unrestricted access to the auditor, basically. The management is also responsible for providing written representations to the auditor at the end of the audit. So these are, in a nutshell, some of the responsibilities of management and those charged with governance. And all of these responsibility is to enhance the efficiency and the effectiveness of the audit, for the audit to run smoothly, so that everyone at the end of the day is happy. Then let's talk a little bit about harmonization of the accountancy and audit profession. So when we are talking about harmonization, we are talking about convergence, we are talking about the coming together. Obviously, the International Federation of Accountants is an international regulatory body for the profession. But you know that each single country has its own regime when it comes to matters relating to the audit, has its own regulatory regime, which may not necessarily apply the principles of IFAC. Every country has their own regulatory regime and how they do things. So the whole concept of harmonization is to ensure the universal adoption of international accounting standards, or like international auditing standards that apply across board universally. That's the whole principle of harmonization. That local laws would be merged in together to become one universal standard. That's the way you need to think about it. But there are certainly the advantages to this, right? So if you adopt global auditing standards, it improves the efficiency of the audit process for multinational companies. Multinational companies have subsidiaries in different countries, and it means that they have to prepare their financial statements, or they have to audit their financial statements based on the laws that pertain to that country. But when if there is going to be a global audit standard, then it means that it improves the efficiency of the audit. They don't have to, kind of like audit each and every of their subsidiaries based on, the specific country audit standards. If it's globalized, then it becomes kind of like a once for all audit based on some universal or global audit standard. Very, very key. But the disadvantage is that, or the barrier here is that getting international agreements on audit practices is quite difficult, because most countries have to change their local laws in order to bring it in line with international agreed practice. So harmonization itself is an ongoing conversation. It's taking, a lot of time, because local laws are different, and you need to bridge the gap between, virtually a lot of countries in order to come to a universal standard. So that's what you need to think about harmonization, convergence, the coming together. Very, very important. Then let's move on to the role of regulators in protecting the interests of the public. So what is the role of regulators in protecting the interest of the public? Very, very important. Very, very important. We talked about the fact that the whole point of regulation is to protect the interests or serve the interest of the public. So let's talk about some regulators, some key regulators. And we are using Ghana as a case study. The first one you all know is the Bank of Ghana, right? So the Bank of Ghana, also known as the central bank, is responsible for the overall supervisory and regulatory authority when it comes to matters relating to banking and non-banking financial business. So its overall objective is to ensure a sound and efficient banking system. So obviously, if you are an auditor and auditing a client within the sphere of banking, you would submit, or the guidelines in the Bank of Ghana Act would influence your audits. That's the whole purpose of these regulations. They oversee the affairs, the affairs of companies and auditors that audit clients within that sphere. Very, very important. Very, very important. They also have the Securities and Exchange Commission. The Securities and Exchange Commission was established under the Industry Act 2016, Act 929. And it's responsible for preserving the integrity of the securities or the capital markets. So you might say that how does audit relate to the capital markets? Don't forget that auditors ensure the credibility of the financial statements. They ensure the credibility of the financial statement. Don't get that twisted at all. So, and investors depend on the financial statement to make investment decisions. So they look at the financial statements and say, oh, I would invest in this company or I wouldn't. So auditors play a huge role when it comes to preservation of the securities markets, so that because they increase the credibility of the financial statements and the information that is put out there for users. So obviously the Act 929 also influences the activities of the auditor. The Securities and Exchange Commission, its objective is to regulate and promote the growth of a fair and efficient securities market in which investors are protected. So they will regulate the activities. Obviously the act also influences the auditor, because the auditor is also in the business of preserving the capital markets by ensuring that reliable financial statements are put out there for investors and users. Very, very important. So first, regulator, Bank of Ghana. Second, the Security and Exchange Commission. Let's move on to the third. The third is the National Insurance Commission. The National Insurance Commission was established in 1989, but it now operates under the Insurance Act, Act 724. It basically administers and supervises the insurance industry in Ghana, and its purpose is to protect policyholders and the insurance industry in general. So if you're an auditor and you're auditing a client within this area, obviously Act 724 is going to influence your activity. It's going to regulate your activity. The whole purpose is to protect policyholders, is to serve the public interest. Don't forget that, serve the public interest. The last one is the National Pensions Regulatory Authority. This was established under the National Pensions Act 2008, Act 766, and its responsibility is approving, monitoring, and regulating, pension funds, pension fund assets, pension schemes, pension fund managers, etc. Anything relating to pensions, it's in the purview of the National Pensions Regulatory Authority. Just think about it. One key area where audit is really, really needed is in the pension space. It's in the pension space because you need to protect people's pension money. People are saving towards pension, and you need to ensure that proper audit occurs when it comes to auditing some of these pension firms. Very, very important. So these organizations, like the pension organizations, are required to keep accounts, appoint auditors, and submit a copy of their annual accounts and auditor's report to the authority. Because this is, just imagine, this is people's money right here. This is people's money. This is people's pension that they are saving for, so when they get to retirement, So there has to be an audit check for these pension firms to ensure that if people are saving 10,000 every month or 1,000 every month, whether that's actually the number that is recorded, you need to be checking their annual accounts so that people don't lose their money in the process. And overall, the public interest, don't forget that the public interest is always served. So these are basically some of the regulators. This video is a quick and snappy video. It's an addendum to the previous lecture. So we talked about the responsibilities of management, the rights of an external auditor. We talked about regulators, etc. We talked about harmonization as well, which is something you need to understand. So as always, just subscribe so that anytime I post a video, you can get the lectures, and that's all you need to pass. Just watch the videos, just study, and you should be fine. I believe that you can pass, and I'm here to teach you to pass. So I can't wait for your testimonies and your success. Thank you so much, and have a great day.